In just the last month, Nike's stock price has fallen by over 20%, and in my opinion, the market has still not priced in all of the potential downside with this company. So in today's video, we're going to take a look at some of the risks around Nike's stock, and we're going to highlight how those risks could affect the business, especially when it comes to their EPS numbers. And we'll leave off the video by diving into their EPS over the next couple of years and how I think things could play out in Nike's favor, but what could happen in the short term to potentially send the stock lower. On this channel, we look into companies that are potential good investments and evaluating them based off PE ratios and valuations. So if you enjoy that type of content, make sure to subscribe for more videos like this one and drop a like if you enjoy this video on Nike. And one thing I make sure to do on this channel is share my portfolio with you guys. This is the YouTube portfolio. It's currently sitting at a value of $58,078.54. And in my opinion, it's extremely important to disclose the positions and the moves that you're making in the market when you're talking about money, especially when you're talking about companies that you hold. In this case, Nike is not a company that I hold. It is one that I've paid attention to over the last couple of months, but it just hasn't yet become a buy for me. What I do hold in this portfolio is Supermicro Computer, Google, Microsoft, SoFi, Alibaba, Visa, Apple, Palantir, and PayPal. You can pause the video if you want to look over these positions. However, I did go in depth in a video that I posted yesterday on March 29th. So check that one out. It goes over the moves that I plan to make in the market, even with a couple of these dividend ETFs that I hold, VYM and SCHD. So make sure to check that video out. Right now, I do also have a cash position of just over $7,000. With that out of the way, let's jump into Nike. As I mentioned, the stock is down over 20% in just the last month alone. Year to date, however, it is only down 14%. Over the course of the last year, it has dropped by over 30%. And the 5-year chart now, they are still down as well, down around 20%. It hit an all-time high back in 2021 of $177 per share. However, from that point till now, the stock has dropped by almost 65%. So not only is Nike at a 52-week low, it's clearly also at a 5-year low, but it gets even worse because you actually have to go all the way back to 2017 to see stock prices around the same price level that we're at today. And really the reason for this most recent drop is that investors are finally starting to price in that Nike is going to see a fourth quarter decline in sales somewhere in the mid-teens range. And this drop in sales was confirmed by the CFO Matt Friend. He said that Nike expects its sales to decline in the fourth quarter, which is set to end in May, to be at the low end of the mid-teens range. The company also anticipates that their gross margin will fall between 4 and 5% as they continue to ramp up their liquidation of excessive inventory and stale styles. Matt Friend said, "We believe that the fourth quarter will reflect the largest impact from our actions and that the headwinds to revenue and gross margin will begin to moderate from there." This is a very important statement to give some confidence back to investors. However, the next statement, in my opinion, is extremely important. He goes on to say, "We are also navigating through several external factors that create uncertainty in the current operating environment, including geopolitical dynamics, new tariffs, volatile foreign exchange rates, and tax regulations, as well as the impact of this uncertainty and other macro factors on consumer confidence." And in my opinion, right now, all of this has not yet been priced into the stock market. We are starting to see the effects of it, and that's why the S&P 500 is down around 10%. However, the next earnings season is going to be very important. There are going to be a lot of companies that miss their earnings numbers, and they are going to use consumer confidence as the reason they are not hitting their numbers. If we see Nike come through and report low numbers, that is to be expected. However, if they come through and report low numbers, as well as cite concerns about the future quarters of the company and what results they're going to put up, that could send the stock stock lower in a meaningful way. And it's almost like Nike is already hinting at this potentially being a possibility. Their CEO recently visited China. China is one of their biggest markets, and he made the following statement after that visit. I spent some time over there in December. I hadn't been over there in a while, and the competition is a bit more aggressive than I remembered. It's great that the CEO is taking the time to go over there and actually visit a key market and get his hands on exactly what's going on. However, it's clear that he is worried because he even went on to say that they would need to accelerate their pace in China to get back to the sales growth that they want to see in the region. So clearly, China is going to be a little bit more difficult to get back to growth than the CEO had anticipated. And that's not the only thing in front of Nike right now. We are also talking about 20% tariffs. This could have a huge impact on the business. Right now, 24% of Nike's manufacturers are located in China. This could result in not only gross margins coming down for the company, but also a decrease in sales as some of their items have to go up in price. And all of this really goes back to something that I said earlier. Nike right now is being priced in like their sales are going to drop in the mid-teens, as the CFO has kind of stated. However, there are these other risk factors going on with the company, and a lot of people have been talking about this previous quarter's earnings really being everything that's bad going on with the company culminating into one event. However, I think we could see the same thing with next quarter for Nike, and on top of that, we could see very poor guidance for the next couple of quarters as we start working through some of these other issues going on with the macroeconomic conditions. When you look at Nike's revenue numbers, a mid-teens decline in sales will be the largest drop the company has ever seen in revenue year over year when you exclude the one quarter where they saw almost a 40% decline right after the start of the pandemic. Obviously, with all their stores shut down during that time period, they would see a massive decline in revenue. However, the other thing to keep in mind is that they are now starting to comp against very poor quarters. So a decline of around 15% would be a massive hit because even year over year, they're comparing against numbers that were down almost 2% year over year at that time. EPS has actually held up fairly well. However, this most recent quarter isn't yet showing in here. That was around 50 cents, which was a big drop year over year from 77 cents a year prior. And I think this trend is going to continue. I think Nike over the next 1 to 2 quarters is going to continue seeing their EPS fall. And what probably concerns me most about Nike is their forward valuation. They are currently trading at a forward PE of 29.41. This is extremely high, especially for a company that is seeing their sales decline and their EPS potentially fall in a major way over the course of the next year. A lot of companies that have those factors going on are trading closer to a 10 to 15 forward PE ratio, but we haven't yet seen that happen for Nike. What a forward valuation of a 30 tells me is that investors are fully anticipating that the company will turn around on both their top and bottom line numbers. They have not yet priced in the fact that Nike could potentially continue to see declining numbers over the next 1 to 2 years. That really hasn't yet been priced into the stock, and that is what's concerning to me. There's still a lot of optimism around Nike and them turning around the company. We can see that in 2025, analysts are expecting $2.13 of EPS. There's only one quarter left in fiscal year 25 for the company, so this number is probably fairly accurate. However, in 2026, analysts don't expect the company to turn around on their bottom line. They actually are expecting things to get worse and only put up $2.08 of EPS. If you actually consider the risk factors around Nike, the valuation should be much closer to a 10 to a 15 forward P ratio. If we look at EPS numbers for 2026, analysts again are expecting around $2.08 of EPS. That would put a reasonable price for Nike around $20.80. The way this actually could occur is, again, we see Nike come in with mid-teens declines in sales in their next earnings report. They also come through and they give very poor guidance for the next couple of quarters. And then on top of that, if they were to cut their dividend, that would be a massive decline for the stock. We would see a lot of those investors that have been holding the company for years start to bail out because they were dividend investors. And if Nike were to potentially completely get rid of their dividend, I think the stock price could easily get down to that $20 to $30 range. What's probably the most realistic situation is we actually see Nike report very poor numbers. They provide some guidance that is a little hesitant to investors, and the stock trades down to a valuation of around a 25, which would put the price of around $52 per share. But for me personally, I want a stock to be trading at rock bottom valuations. I really want to be confident that there's not a whole lot further that the stock price could fall. That's why I think the stock needs to be anywhere between $20 and $30 for it to be a reasonable buy. If you were able to get Nike stock at $20, if we look at 2027, and let's just say the company actually sees a very strong turnaround over 2027 and 2028, those could be EPS numbers of around $3.25 to maybe even $3.75 in 2028. Valuations could potentially still stay low, anywhere between 20 and 30 for this stock. That could result in stock prices anywhere from $65 per share to $112 per share. Based off a current stock price of $63 per share, I don't think there's a whole lot of meat on the bones for the stock to go up, right? If we look at 2027, even if the company turns around, we're basically saying that the stock would trade flat. In 2028, maybe we could see the numbers go up to $112 per share. That would be around a double up, a little less than a double up from where the stock is currently trading. However, if you were able to get into the stock around $20 to $30 per share, that would easily be a double up based off potential numbers for 2027, again around $3.25. In 2028, that could be almost a 5x in the stock price to reach $112 per share. Those are very interesting returns to me as an investor. But who knows what's really going to happen with the company over the next 6 months? There are a lot of uncertainties in the market right now, so don't buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research, looking into the risks, and understanding your thesis around the company. So thank you so much for watching. If you did enjoy the video, drop a like down below and subscribe for more videos like this one. And as always, have a wonderful rest of your day. And for the joke of the day, why did the duck fall on the sidewalk? Check the comments down below for the answer. Thanks for watching.